Welcome back. My name's Alex Melconian. I'm joined today with John Ekmekdjian from TD Bank, mortgage specialist. And today is September 10th, 2025. And last time John and I got together was June 5th, 2024, when prime rates were 4.75%. They had just come down a quarter point that day.
Yep.
And today, well, now prime is sitting at 2.75. We're going to talk about that. And we're also going to discuss we're going to discuss about bridge financing, porting mortgages. Last time we got together, we were discussing mortgages and refinances and the three different types of refinancing and how much they cost. John, thanks for coming back today. How
Thanks
you
for having
doing?
me back, Alex. It's always good to see you.
Wonderful.
You
It's
as
always
well.
great to see you
Yep.
too.
Yep.
So, as I was mentioning, rates were 4.75 last time we got together. It's
At
been
peak.
15 months
Yep.
since we got together. Now we're seeing rates at 2.75. We know in a week from today, on September 17th, the Bank of Canada has another rate announcement.
Yep.
What do you think's going to happen, John? Do you think rates are going to stay the same? Will they come down or go back up?
Yeah, well, that's the $1,000,000 question everyone's asking these days, right? So we've had a couple rate decisions where it's remained flat, no change. We're hoping, I'm expecting a quarter point cut this time, but the signals are pointing towards it, but we never know until the day shows up. Anything could happen between now and next Wednesday, a week's time. Anything could happen in this world these days.
So, fingers
Yep.
crossed it comes down because it would be a nice relief. I mean, you know what? Thankfully, we've seen a fairly steady downtrend. I mean, in 15 months' time to come down 2%. I think that's
We were at the peak last June whenever we talked, right? People were taking mortgages for about 6% or even more. Definitely a little bit of easing of that. In the meantime, there's been quite a few quarter point or half point cuts. If I had to go with my gut right now, I would say maybe a quarter point cut coming next Wednesday, but
quarter point. You guys heard it here. We're going to hold them to it. We're going to see. Well, you know what?
let's hope so.
Let's hope so. Absolutely. I've been seeing more activity in the market, and I think people have just gotten used to or getting used to today's environment. So people are slowly coming back to the market. And there's a lot of people out there that want either need to upsize, get a bigger home, or downsize. And financing is quite a challenge today. The banks do not want to loan you a mortgage, or they're being very stern about it. Um, Tell us, how can TD help? How can you guys help if somebody's looking to upsize
Yeah.
or downsize?
Great question, Alex. I get this question from my clients all the time. Whether their kids are moving out, going to college, and they're looking to downsize, maybe cash out some of their equity, or vice versa. They got a raise, they got a nice job, they want to upgrade their home, they upsize their home. A couple things you need to keep in mind for this most important thing, and again, I always refer to my clients to speak to you, Alex, or their trusted real estate agent, and discuss these things before moving forward. But very important thing is to keep in mind the sale of your home and the purchase of your new home. The closing dates matter. They're very important. Okay. If you have a purchase in place, and I think what a lot of clients like to do is close the purchase first, have a week or two to move things over from the old home to the new home,
Yep.
and then have the sale in place. So, in a scenario like this, you would need what we call a bridge loan, bridge financing.
Hmm.
Um, Bridge financing is not exactly cheap. It's closer to about 9-10%. Again, depending on where the prime rate is at that time. It could go up or down a little bit, but right now we're at around 9%. That's an annual rate. What's very important with bridge financing is most of the down payment for your new home, a lot of clients comes from the sale of their current home and the equity and the proceeds from there. So if you need those funds, but you're going to buy your new home first, where are you going to get that down payment from, right?
That's where you come in.
That's where we come in.
Yep.
So we can do a bridge loan in these scenarios. Now, to get a bridge loan approved, as long as you have the new request, so the new mortgage or new home equity line of credit, we call it a HELOC, on the new property approved, the bridge loan is almost an automatic approval. One thing that you must have to get a bridge loan is a firm sale in place for your current home. And a firm sale means once the conditions have been met or waived, That's what we call a firm
Yeah.
sale, of course,
Yeah.
and you need to have that in place. Once we get that firm sale in place and we have the mortgage approved for the new property, we put in the application. It takes about a day or so, and it's almost surely going to get approved at that point.
Okay, and that makes sense to me. The bank wants to make sure you have a firm sale so they can loan you that time, the money you need for that short period of time.
Exactly.
And I understand also you can have a maximum 90 days for a bridge loan. Is that correct?
90 days is the maximum for a bridge loan, yes.
Yeah.
So it's very important to keep the closing dates as close as you can together. You also don't want to stretch out to 90 days. It could become very costly in a scenario such as that. I actually had just a client call me just yesterday with a similar scenario. They actually have no mortgage on their current home. So in a scenario like that, what you could do is take out the home line of credit on your current home. You can use those funds, you pay off the new property, you buy the new property with those funds,
Yeah.
and then once you sell your home, that home line of credit is paid off and closed by your solicitor, by your
That makes sense
that's
to
the
me.
easiest route for it. Now, there are scenarios where that's not possible, and instead we need a new mortgage on the new property and the bridge loan at that day. We can go up to 90 days. Like we said, it's better to keep that within a month or so if you can, a couple weeks at best.
Yeah.
It could get costly if you're going up to that 90
Right.
days.
Yeah, I understand. It can get expensive, and you want to try to avoid those long weekends too. You
Yeah.
can't, right? Back in 2021, when I was closing on my property, we had a bridge loan, and sure enough, our closing date fell on a brand new mandatory holiday, so that pushed our closing date, and that pushed the bridge loan, and we had to pay a few extra $100 for it.
Sounds like an expensive holiday,
That's
Alex.
yeah, it was an expensive holiday, John.
Definitely good to keep that in mind.
So, I mean, that's great to know. So, bridge financing, very important. Now, here's another scenario. I'm looking to upsize or downsize, and I have a great rate, and I want to keep the rate that I have with my existing mortgage. What can I do with my existing mortgage and that rate to
Absolutely.
hold it?
Absolutely. So, in this scenario, I mean, the best thing for you to do is what we call a port. You're going to port your mortgage.
Hmm.
Porting your mortgage is essentially just porting the rate in specific. So, to kind of keep them simple numbers, say you have a $200,000 mortgage and the rate is 2%, you need $200,000 more to purchase your new home. So we're going to get you a total of 400,000 mortgage on this.
Yeah.
The new rates are probably, as of right now, at least close to around 4%. Let's estimate it. Hopefully a little lower if you call me. So what we would do is take the balance of the 200 with your higher rate, the 200 with the lower rate, and we blend the rate together. And that way your rate will end up somewhere in the middle, likely, which will still be much lower than your current rate offered.
This is fascinating. To be honest, I never knew that. I didn't know you guys can blend it together. So the interest rate, uh, you got the 2% on your existing, and then the brand new one's going to be 4%. But you're saying you blend it together and get a rate of about 3%.
Exactly. Now there are some rules to this, right? Just with everything, you have to take a term of equal length of what you currently have. So if
Right.
you have 2 years remaining on your current fixed term, you have to take the new 2-year rate on the new amount and
Okay.
blend it with that. You can't take a 5-year term and blend it with your 2 years you have remaining. It has to be an equal term. And also the port needs to be done within 120 days of each other closing. So same thing, if one's closing before the other, you have 120 days where they have to close within that time so
Yeah.
that we can port it for.
Okay, well, that makes sense to me. There's some criteria that needs to be
Of
met with
course. Yep.
everything. And I'm sure every case is a little different. Every scenario is going to be different, and you're going to decide what's best for you
Absolutely. I
and the
can't stress
consumer.
that enough with clients. Every case is case by case. There's never an exact same scenario. I definitely would recommend give us a call. Let's talk before you actually move forward on it.
Yeah. John, thanks for enlightening us about this. That's fantastic. And if any of you out there have questions about bridge financing or porting mortgages, contact John. His contact information is going to be here. If you'd like to see our previous video where we discussed mortgages and refinancing, you can watch that over here. John, thanks so much for coming here today.
Alex,
Much
always a
appreciated.
pleasure. Thank you very much for having me. We'll see you soon.
All right, thanks.
Thank you.